I think he could only beat Trump, and that others would be.
And that any other Republican candidate would beat him.
But this definitely throws the conventional wisdom here upside down. Thank you, Ryan. As always, have a great weekend. Ryan Teague Beckwith leaving us along with all the lawmakers. It's just us here now, Kayla.
Just you and your gold bars.
That's right. Thank you. Let's get a check on world and national news. Nancy Lyons is still with us in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
I am still here. Thanks, Joe. UAW President Sean Fain is reporting progress in contract talks with Ford, but he says GM and Stellantis, another story. So he's announced an expansion of the union strike, which is now including all parts distribution centers for those two automakers.
We will shut down parts distribution until those two companies come to their senses and come to the table with a serious offer.
Fain says the strike now expands to 20 states. The union is seeking pay raises of 36% over 4 years. The car companies say they cannot afford the union's demands despite huge profits because they need to invest in the transformation to electric vehicles. Well, there is also no progress to report in efforts to avoid a government shutdown. House Speaker Kevin McCarthy sent House lawmakers home for a 3-day weekend with a shutdown looking likely in little more than a week.
Divisions within the GOP have party lawmakers struggling to agree on how much to cut spending and unable to come up with a set list of demands from Democrats. Republican infighting torpedoed plans for a Saturday House vote on a temporary spending bill that would have at least served as a starting point in negotiations with the Senate. Bloomberg Economics estimates a month-long government shutdown could temporarily push up the unemployment rate to 4% in October. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is set to introduce the first-ever White House Office of Gun Violence Prevention this afternoon. Vice President Harris will lead the office, which will coordinate efforts to reduce shooting injuries and deaths nationwide. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P lower, NASDAQ higher, barely holding on to a 1-point gain right now. We've got the S&P down 4 to 43.25. That is a drop of 0.1%. Dow Industrials down 68 right now, holding at 34,006. The Dow is down by 0.2%. 10-year yield 4.43%, with a 2-year 5.11%. Treasuries are rebounding. Stocks are wavering at the end of a jittery week that saw investors positioning for a higher for longer Federal Reserve stance. Jay Pulaski is Chief Investment Officer at TPW Investment Management, and he spoke about the market outlook this morning with our Matt Miller on Bloomberg Surveillance.
So we're on a hunt for the return to stability, which is going to unlock the $1 trillion that went into the money market funds. And I think we've moved a lot closer to stability, believe it or not, after the last couple of days than we were a week ago.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. As we have been reporting, GM and Stellantis facing walkouts at 38 more facilities as talks with their workers' union failed to make headway. Ford was spared the escalation after making progress in the negotiations. Today, we're looking at an update for Ford shares. Right now, we do have Ford gaining by 2.3%. General Motors down 0.5%. Stellantis, the parent of Dodge, Chrysler, Jeep, Fiat, among many other brands, Stellantis up by 0.1%. Recapping stocks trading mixed. S&P lower, little changed, on track for a losing week, down right now by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Well, the noontime deadline has come and gone, and we know what the UAW is going to be up to this weekend. Expanding strikes at GM and Stellantis plants. Not so at Ford, however. We heard from Sean Fain earlier. Kaylee, the president of the UAW, loves Facebook Live. This is how he communicates with his members, who are, of course, spread around the country. And he showed up a couple hours before the deadline here to make the announcement. I guess Ford's doing something right.
Yeah, by agreeing to more of what the union is asking for. He gave a whole presentation, like a PowerPoint presentation in this live stream.
Yeah, it was comprehensive.
In which he went by each one, 3 by 3, the different issues, like job security, for example. They say Stellantis and GM have rejected their job security proposals. Same with temp workers, a bunch of other issues, whereas Ford has come to meet the union more. There's still issues to work out, to be sure. There's not a deal to be had yet.
Right.
It just is making more headway in those talks.
Pretty close to how Sean Fain put it earlier today.
We still have serious issues to work through, but we do want to recognize that Ford is showing that they're serious about reaching a deal. At GM and Stellantis, it's a different story.
A different story. And that's where we begin with David Weston, who joins us from World Headquarters in New York, the host of Bloomberg Wall Street Week and our dear friend here on Bloomberg Sound On, and also a native of Flint, Michigan. Right, David? It's Flint.
It is Flint,
your
indeed.
dad worked in the car business. You've lived this before, but it feels kind of different this time, David. What do you make of this, playing the automakers against each other, or is that actually getting back to old-fashioned union negotiating?
Boy, you took the words out of my mouth. Yeah, exactly. My dad was at AC Sparkplug. My grandfather was at Buick. And actually, they were saying this is a stand-up strike. We're going to go after all three, just selective plans. But now it's starting to feel like sort of a mix with pattern bargaining, as we used to call it back in Flint, Michigan, which is they go after one automaker, and then they get a deal with them, and then they roll the other one. So it looks like they're sort of going to a version of that now to try to get a deal out of Ford that they really like a lot. Because as you say, they went through a lot of things, not everything by a long shot, as Kaylee said, but some things they got cost of living adjustment, they eliminated some tiering, they got some job security. They're feeling better about Ford, so good for Ford, I guess.
Well, and David, it really at some point, we're not there yet, is going to come down to not what it took to get a deal, but what the ramifications of that deal once it's agreed ultimately are. And I know you were kind of talking about the longer term impact of this with Steve Ratner for Wall Street Week this week.
Yeah, exactly. He's going to be on Wall Street Week later on this evening. And first of all, he said this is the toughest one he's ever seen. Of course, we know Steve, in addition to being at Willett Advisors, where he invests Mike Bloomberg's money. In addition was the car czar, so to speak, who really presided over the remaking of the auto industry. And he said this is the toughest one he's ever seen. At the same time, we asked him, what are the unintended consequences, the collateral consequences that might come out of this? This is part of what he said.
The unintended consequences are what happens to the number of jobs, not the price paid for each job. The yin and the yang of this, and it's a tough one, is that the more the auto workers get paid, and I'm in favor of them getting paid more, the fewer jobs they're going to be. That's just the inevitable result of this. If you look, for example, back since 2009 at the number of jobs that have moved to Mexico and the fact that there are now more auto jobs in Mexico than there are in the United States, it tells you something about how capitalism and free enterprise works. It finds the lowest cost locale that can meet its needs.
So that's Steve Ratner saying there are larger forces even than the UAW and GM, Stellantis, and Ford. And it's not just those parties, of course. We have a Tesla Motors who's benefiting from this. They don't have any unions. You've got all the other model makers and the possibility of jobs moving away from some of the union locations to places like Mexico, but also some right-to-work states here in the United States. So it's a more complicated thing than sometimes we realize.
It sure is, David. Does this mean that Elon Musk has something to worry about if they score generous deals with all three of the big three? Is Tesla next?
That's a great question. They got to organize them first. They can't strike them before they organize them. I actually am about...
Well, no, I mean, could there be a union organizing effort at Tesla? I realize they're in Texas, but they've got plants in a lot of places.
I'm sure they'd love to do that. And if you recall, President Biden kind of encouraged that at one point when he was really freezing out Elon Musk. Do you remember that with some gatherings at the White House? Because they don't have unions. I'm about halfway through the Walter Isaacson book. He's going to be on Wall Street Week next week talking about it. And that would be an interesting confrontation because, boy, Elon Musk is one tough son of a gun.
No doubt.
Well, also, if you're the Biden administration trying to push EVs, you need the infrastructure, and Tesla's supercharger network is going to be really critical if you want to keep electric vehicles on the road and moving about the country. So this also is about just this wider EV transition, which is a policy priority here in Washington, David, but it's kind of make or break for some of these automakers at this point, right?
And they're sort of caught in between a little bit, right, Kaylee? Because, as you know, Sean Fain has actually pointed back at the White House saying part of the reason we're having a lot of problems is because of your press for EVs, because you take something like 40% less workers to make an EV, no matter what the labor terms are, no matter what the contract is. So they're sort of pushing back on President Biden, but they gave him an opportunity today to join them on the picket line. You heard Sean Fain saying, we welcome the president to join us on the picket line. We'll see whether that happens.
Well, yeah, I'm curious what you make of this push and pull here with the politicians, David. We know Donald Trump's going to speak to these members, not an official UAW event. In fact, Sean Fain denounced that visit. But we're seeing some real jockeying now between Democrats and Republicans to try to win over organized labor in the midst of, or I guess, early stages of a campaign cycle here. But Joe Biden says he's the friendliest union president in history. Why doesn't he show up?
Well, as you know so well, Joe, this goes way back, way past with this particular dispute. You recall what happened in Michigan back in 2016 when reports were she denied it that Hillary Clinton refused to go there. I actually went out to Willow Run, which is outside of Detroit, where President Trump, when he was a new president, it was actually at the beginning of February, went out to address about 400 UAW workers in a very cold airport hangar. And I'll tell you, he's been reaching out to those auto workers forever. He said to them, you know, you've been the building of America, you've been the backbone, you have not been respected, I will respect you. So he's been courting those auto workers for a while. That's going to be an interesting contest between Joe Biden and Donald Trump about who's more pro-auto worker.
Yeah, and there's still an endorsement left to be given. David, just quickly, final minute, what else do you have coming up on Wall Street Week this evening?
Well, we've got Larry Summers, as you might expect. He also addresses this question, but he also thinks that the Fed is way too optimistic in his projections that we've heard. We also have Jose Minaya, who runs Nuveen, and he gives us a playbook for ESG. As you know, a lot of funds are pulling back on ESG. We ask him, he's got $1.3 trillion he's responsible for. Are they pulling back? So that's all coming up on Wall Street Week.
That's great. Well, we're always watching David. That's when we know our weekend has begun. When David Weston graces the airwaves on Bloomberg TV, that's when we sit back and watch.
Smoothly guides us into it.
Absolutely, yes. David, good to see you. Happy Friday. We'll be watching Wall Street Week. It comes right after Balance of Power, 6 p.m. Wall Street time on Bloomberg TV and radio. With Kaylee Lines, I'm Joe Matthew in Washington. This is Bloomberg Sound On. It's just us and the tumbleweeds as lawmakers head home for the weekend. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple shares up 0.8%. Apple's latest iPhones and watches now officially on sale. It'll be a test of whether a new smartphone design and modest smartwatch changes can help return the company to growth. The devices are on sale in about 40 countries in the first wave, including Australia, Hong Kong, mainland China, the United States, the UK, and France. McDonald's is bumping up the fees it charges U.S. and Canadian franchisees to operate some restaurants. And with that story, here's Bloomberg's Kimberly Adams.
Charlie, owners who open new restaurants or buy locations previously run by McDonald's will have to pay the parent 5% of sales. That's up from the current rate of 4%. This is according to a message signed by Chief Financial Officer Ian Borden that was reviewed by Bloomberg. Restaurants that change hands as a result of the transaction between franchises won't be subject to the new rate, and operators that sign new 20-year agreements won't either. Transfers from current owners to next-generation family members are also unaffected. Charlie?
And that's Kimberly Adams. We got McDonald's up now by about 0.5%. Microsoft's $69 billion acquisition of Activision Blizzard looks set to clear its final regulatory hurdle after the UK competition authorities signaled that they will accept the latest concessions, ending a wait of more than a year and a half to complete the biggest ever gaming deal. Shares of Microsoft down 0.6%, Activision up by 1.7%. Those are our top company stories at this hour. I'm Charlie Pelleton. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington with some final thoughts ahead as we're left alone here in Washington for the weekend. Let's get you up to date on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. There is progress being reported in talks between Ford and its auto workers. But UAW President Shawn Fain says it's quite different with GM and Stellantis, so he's called on union members to expand their strike.
All of the parts distribution facilities at General Motors and Stellantis are being called to stand up and strike. We will be striking 38 locations across 20 states, across all 9 regions of the UAW.
Fain says the union is still pushing for pay raises closer to 36% over 4 years and an end to tiered wages. The automakers say despite strong profits, they cannot afford to meet the union's demands. Senator Robert Menendez has been indicted by federal prosecutors.
The Democratic senator from New Jersey was indicted by federal prosecutors over allegations that he took hundreds of thousands in bribes from 3 local businessmen to protect their interests and help the Egyptian government. The indictment in federal court in New York alleges that Menendez and his wife engaged in a corruption relationship with the 3 New Jersey associates and businessmen from at least 2018 up until about 2022. The government said that the couple accepted bribes, including cash, gold bars, and payments toward a mortgage and luxury vehicle. In New York, Michael Barr, Bloomberg Radio.
Menendez has responded saying prosecutors have misrepresented the normal work of a congressional office. Israeli Prime Minister Benjamin Netanyahu says Israel is at the cusp of a historic breakthrough with Saudi Arabia. He told the UN General Assembly today he expects a peace agreement soon between the 2 nations.
Such a peace will go a long way to ending the Arab-Israeli conflict. It will encourage other Arab states to normalize their relations with Israel.
Netanyahu says such an agreement would truly create a new Middle East. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Have a good weekend, Joe and Kaylee.
Oh, you too, Nancy. I appreciate that. Of course, we'll have our pick of the parking and I guess the restaurants this weekend because
clear sidewalks.
Everybody left.
Yep.
Didn't expect that. We thought we might have a vote on a continuing resolution tomorrow. They said it was a working weekend, Kaylee. But around this time yesterday, Speaker McCarthy basically sent everybody home
Not so
for
much.
their lack of progress. I think he figured the more time they spend together, the worse this might get. And you talked about this with a lawmaker from Tennessee who didn't seem too happy to leave.
No, he did not. That would be one Republican Congressman, Tim Burchett.
Pass a dadgum budget, stay here. Oh, we're going to stay here all night to vote on these individuals. You know what? We make a hell of a lot of money. And you tell somebody back in Tennessee, somebody making $170,000 isn't willing to work at night or work in the morning, folks, that is wrong.
It's wrong.
Yeah.
But he had to go anyway, I guess.
I guess so.
Unless he's just hanging here with us. That's something else. You know, $170,000. It's not like they're digging ditches.
He was talking about how they all walk out with their Brooks Brothers suits draped over their shoulder after having a catered meeting.
Right. But they're gone.
Yep.
The airplanes have taken off.
Monday will be pretty nice, too.
Yes,
they
it
don't
will.
come back till Tuesday.
And we'll meet you then here on Sound On. As always, on Bloomberg. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Happy Friday, or Friday, as our Sarah Livesey likes to say. It is Friday, September 22nd, 2023. Carol Masser, my co-host Tim Stenivek, is off on this Friday. Bloomberg's Jess Metino in the house, thank God, because we've had so much going on in terms of the trade this week. Worst week for stocks since March, is that right?
What a week. Yes, it's been bouncing around, but at this point, it's back on pace for its worst week since March. But I also want to point out the S&P 500 did snap a streak of 102 trading sessions without a drop of at least 1.5% yesterday. So that was the longest streak since 2018. So it really tells you that basically since the late April, people were buying any sort of marginal dip there. But then now we're beginning to see some of those bigger moves on the downside happening.
All right, we're going to talk about all that. And it really was a big reset in terms of the Treasury trade. We're going to talk about that in a big way in just a moment. We're also just going to get the latest on the UAW strike and the latest on the passing of the baton, the real-life succession story of Rupert Murdoch putting the future of his nearly 7-decade-old media empire in the hands of, I guess you could say, his chosen son, Lachlan.
Plus, Eloisa Lewis, founder and CEO of New Climate Culture, a biodiversity think tank focused on delivering climate solutions, and really looking forward to talking with Aaron Ryder, producer.
Well, I was just going to say, what's interesting about Eloisa Lewis, she's talked about fast fashion and the impact on the environment, but her company works with all these different companies about kind of doing better and reducing their climate footprint, if you will. But then you mentioned Dumb Money.
Of course, everybody is so excited, right, for this movie, Carol, especially when you think about the frenzy when it came to GameStop back in the pandemic and all of the stock craze at the time. So definitely going to have a really interesting conversation with him.
All right, and then we've got ahead of all the football this weekend, there's a great story in Bloomberg Business Week. The new issue is out on newsstands. It's online and on the Bloomberg. Deion Sanders writing the new playbook of college football. Played pro football, also baseball, as I was reminded by our Ariagami. I mean, he can do it all. And so we're going to get into what he is doing, kind of really working when it comes to how we think about college football, how it's played, and a fascinating individual. So we're going to get into that in just a moment. In the meantime, we're seeing some buying in the equity trade, a little bit of a turnaround. We've got the major equity averages all in the green. So we're going to get into that, talk about what's going on in the Treasury trade, and a few interesting stories that have definitely popped up on our radar. But time to head over to our TV colleagues. Remain in Katie, because Countdown to the Close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser, Jess Minton in today for Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms here on a Friday afternoon where we were looking for a little bit of a pop here, Carol, to kind of undo some of the damage from earlier this week. That's not happening. And one of the big laggards that we're seeing today is actually the Russell 2000 and the small cap.
Yeah, I'm glad you went there because there's a great story by our Esha Day taking stock of what's going on in the trade and looking specifically at what's been going on in terms of the Russell 2000. And she has said, in terms of talking to some individuals, including Matt Miller. She could have talked to Matt Miller.
Talking to Matt Miller.
Matt Maley of Miller Tapeback. Matt Miller, did you? No. So I'm just going to read from her story. The Russell confirming a move toward a bearish trend after breaking below an important support level, triggering several technical indicators in quick succession. I mean, read through the story, but it's interesting. You watch some of these different market indicators, Jess, right? And what it might portend, because it seems to be when you see extreme moves in small caps, often a precursor for even more challenges in the equity trade.
And typically small caps are the ones that bottom before their larger counterparts, but they've been under pressure, particularly over the last 2.5 years, but they did recover towards the end of last year, but still over the past few months struggling there. So what that really means when you're looking more toward bigger cap stocks. But I have to point out, Bloomberg Intelligence, they do have a fair value model that does suggest that, say there is a soft landing type scenario for them, they could actually end up orchestrating a pretty big move there. But again, it remains to be seen as far as what this means moving forward.
Yeah, well, they have to, of course, get to that soft landing, Katie Greifeld. Another big story out there on the terminal today that I know you've been obsessed about.
Oh my gosh, I'm glad that you made the segue for me because I was not sure how to do it. We're talking about the Liver King. Actually, Romaine handpicked this story to talk about a great piece out that basically there's this influencer named Brian Johnson. That is his real name. He's known for eating raw organs, but the problem is a lot of his followers decided to also eat basically raw meat to try to get the physique that this man has. But it came out that actually he's just been taking $11,000 of steroids every single month.
$11,000 worth of steroids? How is he still alive? I don't know. I thought, in all seriousness, I mean, this story has obviously kept a lot of attention. I've been aware of this guy for a while, and there's been a lot of talk about whether
have you been eating raw meat?
What he was selling, no, but what he was selling was legit, or at least in terms of the ethos. But this gets to in all seriousness, this gets to a broader issue here about the FTC policing this. And if you remember, there's this thing, what is it called, the endorsement ad guidelines, and there was a study a few years back that basically showed that something like 99% of the influencers on social media weren't abiding by these guidelines. So the FTC has actually updated that, and it actually exposes folks like this to lawsuits now. I mean, in fact, he's facing lawsuits for basically, making claims that at least the people suing them think are fraudulent.
Is this like being kind of the modern day snake oil salesman or something? Like, no, I do wonder about like the responsibility, right? We're increasingly seeing influencers out on social media. If they say something, I don't know, like we're starting to see more scrutiny of these individuals in terms of what they say, because for celebrities, for a lot of people, like we're like, okay, they're a celebrity. They wouldn't lie about something.
Well, exactly that. And you remember, of course, I'm sure Katie remembers the whole fallout from the crypto endorsements when every celebrity seemed to have a crypto commercial, and then half of them got sued for what people felt were misleading statements.
This is actually all Romaine and I have been talking about so far.
Yeah, pretty much. Yeah, I'm going to take Katie out for a liver dinner later.
Delicious.
Tonight. Liver and onions, raw.
I don't know about that. Hey, folks, you can't believe everything you read. I'm just going to say.
But it's the internet. If I can't believe the internet, who do I believe?
Exactly. Seriously?
Yeah.
Come on, Romaine.
All right. Well, then I've got something to say.
Have you ever had liver, Jess?
No.
Oh,
come on, I'm from Texas. I eat a lot of meat, but I'm not going to be
right. You guys just eat the brisket.
It's different. It's different down there.
Yeah. You guys got to work on your sauce.
All right, we're going to talk about liver, brisket, maybe, and some other things when we come back in less than an hour's time. We're going to count you down to the close.
What time is the wine segment?
I know. Well, not this Friday. What's up with that? All right, we'll be back in less than an hour's time. 4 p.m. Wall Street time. We're going to wrap up the trading day and week. Our cross-platform on radio, TV, YouTube, and Bloomberg Originals. Join us for Beyond the Bell.
Gotta get back in time. Gotta get back in time.
All right, everybody, let's stay with the market trade. Back in time, it is kind of interesting in terms of what we are seeing. I feel like this week, another reset, right, when it comes to just the market think.
Definitely, and especially when you're thinking about just the big move that we did see in Treasury yields, particularly the 10-year rising above 4.5% briefly last night. And so also hearing what we're happening when we're looking at this business activity stagnating in early September, but then you still have other gauges that are saying other things opposite when you're looking at inflation basically ebbing, but then still, right, the consumer staying pretty strong there, Carol.
Yeah, there's a lot of stuff coming at us, including some Fed speak. We're going to get into all of this. Let's get a roundup in terms of what we are seeing, specifically really the Treasury trade and what the yields market, if you will, is telling us at this point. Let's get to it. Bloomberg News rates reporter Michael McKenzie is with us. Delighted to have with us, I should say, on Zoom in New York City. Michael, a wild week when it comes to U.S. rates. Talk to us first up, the trade, the cash, the futures trade, how it's moved since the FOMC decision.
Hi, Carol. Well, yes, it's been another wild week. We seem to be getting a lot of them at the moment. The real story, I think, here was the Federal Reserve. People were expecting that they would reiterate they were going to be higher for longer. I think what surprised investors this week was the fact the Fed took out 2 rate cuts for next year, which they previously highlighted back in June. So instead of the Fed saying, hey, we're going to be cutting rates by 100 basis points next year, they're now only saying we're going to cut them by 50. And I think that was a jolt that kind of woke the market up, that this is a Fed that is serious about getting inflation down. Chair Powell in his press conference specifically said people hate inflation. This is the thing we have to really focus on because the labor market has been so resilient. And again, this week's jobless claims that came out yesterday, another low that just helped power the yield sell-off that we saw yesterday, which culminated in the 10-year breaking 450 for the first time since 2007. And in another important factor of the sell-off, of course, has been the rise in 10-year real yields. This is the sort of inflation-adjusted yield that represents the true cost of borrowing. That's above 2%, 2% held from all summer. It finally broke this week, and we got above 210 yesterday. So this has been big moves, and it does suggest that people are at the margin are sort of throwing in the towel on earning the longer end of the curve. There seems to be a continued preference to just shelter in the front end. T-bills give you 5.5%. The 2-year got to 5.20 this week. It's back now around 5.12, but it's now considered to be in the ballpark of where the Fed is. So there seems to be a definite push to own shorter dated maturities and stay pretty cautious. And I've heard from talking to a few bond investors this week who were bullish on the bond market, kind of just hedging their bets here. We're not sure just how far that 10-year can continue to rise from here.
How does that get impacted by the other central bank decisions this week? We did have the Bank of Japan and the Bank of England, but interesting enough, the S&P 500 did peak in late July after the Bank of Japan did have those controls on yield measures there.
Well, I mean, what central banks are doing outside the US is important. I think, again, we saw some big moves in European bond yields this week. That did ripple into the Treasury market. But ultimately, if the Federal Reserve is the dominant central bank here, and if it's telling you that they really have to keep their eye on the ball here and then the job isn't done, then that's really something that's going to hurt people who've been piling into the bond market this year. They're going to have to realize that if the Fed does stick to its guns and the economy does stay relatively resilient here, that there's going to be a higher term premium towards owning treasuries. The other central bank that I will point out is the Bank of Japan. I mean, if you look at that 10-year JGB, it doesn't sound a lot. It's now at 0.73%. That's up quite a lot this year. And there is potential for that to continue to slowly but surely grind higher. And if that does ensue over the next few months, that's going to continue to put upward pressure on 10-year treasuries as well.
So 210 spread. Talk to us about that and what we've seen over the last week or so.
Well, this is, I think, the big trade that's out there in the market. I mean, when you think the Fed's going to cut rates or is getting closer to the end of its hiking cycle, the 2s10 start to disinvert. This is what it's done in prior cycles. And normally it disinverts, i.e. it turns positive because the 2-year yield starts falling faster than the 10-year. What we see more often than not in recent weeks is that the 10-year has been selling off. And so the curve's been steepening, but it hasn't been steepening the way it should normally steepen. And I think this comes back to what I've just talked about in terms of investors want a higher term premium for owning longer dated debt in the Treasury market. Congress is still spending, issuance is still going to go up, inflation still hasn't come back to its target, the Fed is going to be higher for longer. You can make a case that the 10-year yield should be more in the 5% zip code. And if that's the story, then the curve will steepen, but it won't be steepening the way people expected it to steepen. So that's kind of where that's what the market's really trying to wrestle with here. Just how much of a steepening can we get?
Michael,
and whether it's going to be driven by 2s or 10s.
Can I ask you the 2% target inflation rate for the Fed? Does that still seem to make sense? Do traders seem to buy into that based on what we're seeing?
I think traders buy into it because that's what the Fed keeps telling them. And you never fight the Fed. Now, at the margin, there's certainly plenty of people who think, well, they're probably going to fudge and let it get to, say, 3%. But if you were to see the Fed drop its guard here, then the 30-year and the 10-year yields will rise because you have to then price in a higher inflation premium into the back end of the curve. So in a way, the more the Fed says we're going to 2%, they've actually prevented a bigger sell-off here in the back end. And so it's a very delicate dance that's being played between the market and the Federal Reserve.
What do you think is the make or break level on the 10-year and the 2-year to where there'd be a bigger recalibration across asset classes, including stocks?
That's a very good question, Jess. I think, look, stocks seemingly bulletproof at the moment. They can't, look, that if you'd said to any investor 18 months ago, hey, the 10-year real yield is going to be at plus 2% and the nominal 10-year is going to be 4.5%, what do you think is going to happen to tech? I'm sure they would have said, well, it's down. It's going to get absolutely roasted. That just hasn't come out for various other factors. But I think if you were to see a further rise in yields, say towards 4.75 in 10s, certainly above 5.25 in 2s, that should get the attention of the stock market. I mean, at some point you can argue, yes, high yields means the economy is doing better, so that should ultimately be good for profitability for companies. But the other side of the story, of course, is that you're just going to have much higher borrowing costs. I am struck by how much the buyback has dwindled this year from companies. And I think that really reflects the fact that during the go-go years of very low rates, companies could back up the truck, borrow lots of debt through the form of corporate bonds and fund their buybacks. So You're already starting to see at the margin, companies don't like high yields.
It's interesting. Yesterday, Michael, we had Frank Sorrentino, CEO over at Connect One Bank, and we've had some others on who are saying, in a higher rate environment, there are projects in a zero rate environment that made sense, whether it was to build a building or make an investment and for companies to take on debt. In this environment, you really got to think twice, and there are just things that don't make sense. So that higher rate environment for corporate borrowing and just borrowing overall, that makes people stop and think, and it affects decisions. It's also a different line item on a company's balance sheet. It's a more expensive one, potentially.
Yes, it is. But I think the other thing you've got to think about here, too, is that during the years of very low interest rates where corporate borrowing was easy, that actually funded a lot of what you could call a misallocation of capital. A lot of money was spent and wasted. When you have higher interest rates, it actually injects a form of discipline back into the whole investment and sort of corporate decision-making process. And it means that companies are going to think very hard about what they need to do in order to boost the long-term growth rate for their stock and for their company. And as a result, you might actually get better decisions here. You're not going to get the kind of wasted kind of spending that's marked the last decade. I think so. In some ways, the discipline that's coming back into markets is very important. It also applies to investors. Investors now have a choice of, I can put a lot more money into a 5% T-bill.
Right.
Cash is now a legitimate asset class. They can sit there in T-bills and they can wait for an opportunity to come in and buy other assets if they cheapen up in due course. So it's going to be a challenge for companies, but at the same time, there is a silver lining here.
It's so funny that you say that. I was talking with my daughter this morning. She's 20. She's had to open up a bank account overseas, and she's like, "Mom, I did a money market, like I had 4%.
Money
my money that's going to sit there." It's like everybody's talking about it. Michael McKenzie, great wrap up to the week that was. Rates reporter at Bloomberg News. Great suggestion by our own Jess Metton to have him on Zoom in New York City. You are listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the green. A turnaround since our last update, with the S&P halting a 3-day slide. However, still on track for its worst week since March. Here's where we stand. We've got the S&P at 4331, up 11 points, up by about 0.3%. 38 minutes to go until that closing bell clangs on Wall Street. The Dow up 37, now up 0.1%. NASDAQ, the composite index, up 61, up by about 0.5%. Outperforming the NASDAQ 100 index, up now by 0.6%. 10-year, 4.43%. The 2-year right now, 5.12%. Spot gold up $4 the ounce to $19.24. That is a gain of 0.3%. West Texas Intermediate crude up 0.9%. $90.43 for a barrel of WTI. So the Dow, the S&P, NASDAQ all advancing. What about the market outlook? Nadia Lovell is senior U.S. equity strategist at UBS Financial Services.
If you look at the market over the last 3 months, it's essentially flat. And so we think it's likely going to trade within this 4,200 to 4,600 band in coming months. But of course, there's going to be rotation under the hood, some repositioning happening. And we think that that's going to be in favor of the value areas of the market where valuations are a bit more reasonable.
Indeed. Right now, the S&P at 43.43. You can hear more of the conversation with Nadia Lovell on the First Word podcast. You can download it wherever you get your podcasts. Federal Trade Commission is expected to sue Amazon for antitrust violations next week, according to sources, marking the agency's 4th swipe at the online retail giant this year. Shares of Amazon.com right now, Amazon is trading a little changed. We've got Amazon up by about 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glennmead.com to learn more.
All right, everybody. You are listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Jess Matt. And one story that has definitely continued to evolve this week, including on this Friday, is a strike by UAW workers out in Detroit. Today, an update. We've got GM and Stellantis, which owns Chrysler, facing some walkouts at a lot more facilities as talks with their workers' union failed to make headway, while Ford was spared the escalation after making progress in its negotiations. I'm checking my headlines to make sure I haven't missed anything. Let's get to it and let's get the latest, because she is front and center on all of this. Bloomberg News auto reporter Gabby Coppola on the phone in Detroit. Diana Lee, also with us, co-founder and CEO at Constellation. She's here in our Bloomberg Interactive Brokers studio. Her company is a marketing platform for the automotive industry, so they help dealerships reach out to customers. It's a SaaS company. We'll get into it in just a moment. First up, though, Gabby, I do want to get to you. I can't imagine what your life is like and how long your days are, but tell us what's the latest on the strike out there in Detroit, and give us some color of what it's like on the ground.
Yeah, well, I think you did a pretty good summary, Carol. Today, earlier this morning, around 10 o'clock this morning, UAW President Shawn Fain said that he would expand the strike to the parts distribution plants of GM and Stellantis. So that's 38 different facilities across the country. And what we're talking about here is, basically the aftermarket parts, whatever you need to fix your car, Stellantis has a network of 10 Mopar parts facilities across the country. Those people are now walking out on strike. So while the first the first week was targeted at just some 3 key products, the Ford Bronco, the Jeep Wrangler, the Chevy Colorado, those are profitable, very appealing products, but they are not, that is not like putting a stake in the heart. If you really want to hurt the automakers, you go after the pickup trucks, the F-150, the Ram 1500, the Chevy Silverado, and the UAW has not gone there. So while the first time was like, we're going to hurt you a little bit, but it's not, and that's why I thought you saw Wall Street not like losing their mind over this, because it's okay, the trucks are okay. But now they're going for things that will affect the automakers' relationship with their customers, that, One, former Stellantis or Chrysler executive put it to me today. The plants, when they strike the plants, that affects future customers. If you want to go buy a car, that car may not be available, and if this drags on longer. But with the parts thing, you are affecting existing customers because they won't be able to get the things they want, to make their car run if they need to make the car go.
Well, so let's get to you, Diana, because you deal with the dealerships. That's your customer base who deal with the customers. So how are you viewing this, and what are you hearing from those dealerships, and what's kind of top of mind as you see this strike play out?
Yes, so thank you, Carol and Gabby. And Gabby, really well said. My biggest concern is we're not really talking about how it's affecting consumers right now. So
is it really affecting consumers yet, though?
Not yet, but very soon it will be, because now we're talking over 5,000 employees walking out on Stellantis and General Motors parts distribution centers. So what does that basically mean? Anybody that needs OEM parts for Stellantis or driving a General Motors vehicle that will go to a car dealership to get a repair is now in jeopardy of not being able to have that repair. So right now, the biggest issues that I'm seeing right now is if you can actually have an accident or your car breaks down and you need an OEM part and you make a service department scheduling or appointment, you show up and now you have to actually wait for the car to get repaired. If the repair can't be done because there are no parts, then basically you may have to get a rental car. But that rental car is also affected because obviously if they're renting Stellantis or General Motors vehicles, they will not be able to repair those vehicles as well. So the other part that I think we're also not talking about is technicians. You don't need technicians or even parts people within a dealership if you can't get the OEM parts into the vehicle.
So the longer it goes on, they could potentially either be letting some of those go or something's going to maybe break.
Exactly. And also for dealerships, the profitability is usually in service and parts, right? 100% of their absorption rate is usually covered by the service department. So it will affect parts and service profitability, dealership profitability. They may shut down the service and parts center because they can't actually employ people if the parts aren't there.
Well, this just gets to duration, right? All of these things that we're concerned about, whether or not we get to a soft landing or the Fed gets to its soft landing, is the duration of, like, the UAW strike, for example.
Right, and what that could mean for the economy and how the growth projections for the fourth quarter could be impacted by that. Gabby, I wanted to bring you back in this conversation. Why is it that when we're looking at GM and Stellantis, those facing more walkouts, whereas when it comes to Ford, why is that being spared more so?
Yeah, well, because Ford gave the union a lot of the key things they were asking for. They've agreed to them. And it's important to keep in mind, Ford historically has had warmer relations with the UAW than GM or Stellantis. They already say that they spend about $1 billion a year more than GM or Stellantis on labor. And part of that is because they have fewer temporary workers. So that is so in a way, the temporary workers, there's a big difference in pay between if you're a temp worker, you don't get profit sharing, you start out at around $15.78 or $16 an hour, and you top out around $20. But if you're a full-time worker, you start, I believe, around 18, and the top wage is 32. So there's a big difference in cost there. And Ford is already paying those people. They have more, they have more workers in the United States than GM or Stellantis. So so in a way, it's less painful for them. This would be making Ford and Stellantis raise their costs, in tandem with to match what Ford has already been doing. So it actually would help Ford. But also Ford said, they're going to give temps profit sharing after 90 days. They agreed to COLA, which is the cost of living allowance, which is something that the union gave up in 2009, and the workers on the line are very, determined to get that back. And if I could just say, Carol, I think you asked me, what's it like on the picket line? So this week I drove down, about 45 minutes to Toledo, Ohio, to go visit the people picketing outside the Jeep Wrangler assembly plant. And, one of the things I was struck by was absolutely people feel the pinch on inflation, and so even if it's, you could argue, well, you got more money in profit sharing than you did from if we had given you inflation protection. It doesn't matter. People want things that are guaranteed. You know, they don't like leaving things to the whims of the market. That's how they feel. They want security.
I totally get it. Diana, I want to ask you, though, the model is changing. Elon Musk showed us that. Does the industry and workers have to continue to acknowledge that? And that means some jobs will not be needed because, you know, if once again you strangle the companies with higher costs, a lot of higher costs in this transitional period, you know, you could be seeing troubles for the industry overall. At the same time, I am for workers being paid what they are worth, but just got about 30 seconds here.
Yes, and I think
Same thing for dealerships. Dealerships, Elon Musk doesn't.
Exactly. So there are many direct-to-consumer models that are EV that's coming out right now, which is competing after the franchise markets. But at the end of the day, we continue to actually ignore the fact that franchise markets have done a lot for internal communities, right? During COVID, they were the ones that were there that actually distributed food to their communities. They're also the ones that, you know, raise money for the little leagues and everybody within those areas. And these family units have run these businesses for 50 years.
But some would argue straight to consumer, right? We're in a direct-to-consumer world.
Absolutely. And I just feel like at this point in time, there just needs to be different types of flexible models for all different types of consumers.
Gabby, 5 seconds. Should we look for headlines over the weekend? Did we lose Gabby?
No, I'm here. Can you hear me?
Yeah. Should we look for headlines over the weekend?
Yes, I think you should.
Okay.
I think you should.
All right, so appreciate it. Bloomberg News auto reporter Gabby Coppola out there in Detroit. Diana Lee, co-founder and CEO at Constellation, here in our studio. All right, let's get a check on world and national news. Off to Nancy Lyons in D.C. Take it away, Nance.
Thanks, Carol. President Biden says there is a need to better coordinate efforts to rein in gun violence, so he's stepping in and creating a new federal office.
I'm proud to announce the creation of the first ever White House Office of Gun Violence Prevention, the first office in our history.
Biden made the announcement in front of a Rose Garden audience made up of advocates for tougher gun laws. Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent of Bloomberg Radio, is a donor to groups that support gun control, including Everytown for Gun Safety. Ukrainian President Volodymyr Zelensky's trip to the White House appears to have been productive. Bloomberg is learning the U.S. will provide a limited number of longer-range missiles to Ukraine so it can hit targets deeper into Russian territory. NBC News was first to report the deal. And while Ukraine is adding to its capabilities, Russia is also planning to ramp up defense spending in a big way next year.
The draft budget for the Kremlin shows military spending will make up 6% of Russia's GDP next year. That's up from 3.9% now. Total defense spending will rise from $66.7 to $112 billion. Even with soaring war costs and massive sanctions, Russia still expects its revenues to jump 22%. Oil and gas revenues are predicted to grow nearly 25%. In Washington, I'm Nathan Hager, Bloomberg Radio.
New Jersey Senator Bob Menendez is vowing to fight bribery charges, calling them baseless. Federal prosecutors indicted Menendez and his wife today and accused the senator of receiving hundreds of thousands of dollars in bribes for him to use his influence to protect three businessmen and benefit the Egyptian government. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Choppy end to the trading day. We've got the Dow lower, the S&P, NASDAQ, they're both higher. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in a choppy session with the Dow down 18 points now. S&Ps are higher by 5. Well, the NASDAQ is still up by 45. The U.S. 10-year yield at 4.44%. Gold is up 5. Oil is climbing. And Bitcoin is little changed. Among the main 11 S&P sectors, leaders were energy and tech. Only financials and consumer discretionary were in the red. And leaders to the upside in the Dow, UNH and Apple, while Disney fell 1% and led to the downside. In deal news, Coherent spiked intraday on a report Japanese firms are considering an investment. And in other news, the UAW to expand the strike against GM and Stellantis. Wrapping things up, Fed's daily said it's unlikely inflation will reach their 2% goal in 2024. Live from the first breaking news desk, on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and here live. Breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session, getting ready to wrap up the Friday trade and the weekly trade. You got stocks bouncing around here. We saw some buying just about an hour ago or about half an hour ago, and now we're seeing kind of a little bit of a turnaround. But it does feel like, Jess, a little bit of a breather today.
It does, especially after the last few trading sessions that have been pretty volatile, Carol.
Right? It's like significant. All right, so let's see what Sylvia Jablonski has to say. She's CEO and Chief Investment Officer over at Defiance ETF. She's with us on the phone in New York City. Sylvia, nice to have you back here on another crazy week. Here we are in 2023. Let's start macro. How are you thinking about all that happened today, and what kind of flows are you seeing in terms of investor reaction into Defiance ETFs, into or out of, for that matter?
Hi, Carol. Great to be here with you today. Well, it's certainly been an interesting set of days here around the Fed announcement. So, if we just look at the macro picture here, I think prior to the Fed meeting coming up, we had some decent inflation reads. One was a little bit higher than we liked, but overall there was uncertainty, but a little bit of stability, and corporate earnings were holding up well. The consumer was spending. We kind of thought that this was going to be at least clear skies into the end of the year with potentially a bullish market. And then post-Fed yesterday, we now go back to a little bit of uncertainty around the prospect of whether or not there's a change now in the soft landing scenario. So we know the Fed was a little hawkish. He removed about 50 bips of easing in the dot plot, went from 4 to 2 cuts, and the market didn't like it, right? So I think over the last couple of days, what we saw was a little bit of panic selling, and that's often what happens, unfortunately, on pullbacks. I often think about that and sort of wish we would see it the other way, right? Because for sort of dollar cost averaging long-term holders, these are actually the best buying opportunities. But investors get a little bit spooked. So
when you say a little bit, is it really just a little bit, or is it something enough
really
that you guys
a
are
little bit?
Okay.
Yeah.
Any buying?
Just a little bit.
Yeah.
We did. So we saw a lot of buying on the income side. So we've got 2 products that are meant to generate enhanced income essentially, and we saw really outsized buying actually in those 2 funds. And then we saw a little bit of selling in kind of the tech type of names in the AI play, and that's recovering today, which is of note. But yeah, that's kind of where we saw the flow and the action.
When you speak income, equity income, or are you talking about fixed income income?
Yeah, so I'll give you 2 examples. There are 2 tickers. One is JEPY, JEPY, and one is QQQY. And what they do is essentially look to sell in the money puts on a daily basis. So they're 0 data expiry puts that are in the money that expire within 24 hours. And the idea is that you generate the premium on a daily basis to hopefully, provide enhanced income to clients by the end of the year. So they're products that track an equity index, the S&P 500 and the NASDAQ, but the goal is really to sell puts and to gather the premium to pay that out to investors. And so we've just seen incredible demand and interest in these products, and they've actually only been out for a couple of days too. So income is the name of the game this year.
I'm glad you brought up puts, because when you're looking at that lack of hedging that's been there the past few months, especially because of just how cheap it is now as well, what do you think that really tells us? And when you're talking about puts being shorter for this type of duration, does it mask some of the potential hedging that is going on underneath the surface?
Yeah, so that's a really interesting question. If you look over the last couple of weeks, actually, there's been an increase in volume in, kind of hedges going on the books. So I think a lot of investors, and then obviously the professional hedge fund guys and whatnot, were probably doing a lot of that ahead of the Fed meeting. But when you sell slightly in the money puts, it's actually a bullish expression, right? So, our view isn't so much on the direction of the market, but our view is that there's this volatility aspect to puts that expire within 1 day that can be captured to generate enhanced income, essentially. So it doesn't really have a whole lot to do with hedging in the way that we're doing it. But to the hedging question, I do think that you see increased volume. And I've been actually studying this a bunch just because, we've kind of come out with this ETF, but SIBO's come out with some information that actually shows that there have been, kind of trillions of AUM in options buying and selling in recent days. It's been outsized, but it's been pretty level. So the buys have matched the sells, which is super interesting.
So this whole idea of like in 24 hours, is it a case of like, so you kind of always have your money available kind of thinking, or what is it?
No, it's actually that, you get more bites at the apple, right? So, so some of the better known strategies out there are the covered call strategies, right? Where they're holding, let's say, the S&P 500, and then they're employing the covered call strategy to generate income. So we kind of just flipped that on its head and said, well, treasuries are returning 5%. So instead of holding the S&P, why don't we hold, treasuries and have 5% higher income environment, and then sell in the money puts on the actual index and generate the yield that way. So it's really a way to, outperform some of these great covered call strategies that are out there and are also providing amazing kind of income distributions. But, our goal is to kind of beat that.
Should we talk some names?
We should. What are some individual names that you are advising clients to buy?
Yeah, so I think given what's gone on in the last couple of days, there's been so much FOMO this year about, not having gone into the AI stocks and the tech stocks and things like that. And then when you see, kind of days like this and Thursday and Friday, it's as we spoke about before, right? Everybody's sort of like panic selling, but really there should be kind of panic buying, right? Or excitement buying there. I think when you get pullbacks, you think about the future of AI and what that means. It's going to actually, it's not just a buzzword, right? It's something that's going to change healthcare. It's something that's going to allow for autonomous driving, for electric vehicles to work, for smart cities to be connected, for banks to properly manage their risk, and for all of these, kind of different things that we're talking about as they relate to AI and, kind of what powers AI.
So you don't think it's getting old and crusty yet, the AI trade? You think
I don't think it's even started. I think this is the decade of I think AI is the next tech. Like AI, supercomputing, quantum computing is the next 5 to 10 years. That it's going to be the next 5 to 10 years.
Do you also like Tesla
and the revenues will start coming from it?
Oh, I'm sorry, I jumped in. Do you also like Tesla and Rivian? We've got about 30 seconds left.
Yeah, love Tesla and Rivian. Also both knocked off of their pedestals this week, amazing performance into the air. But what you're seeing there is this great interest in climate change, going carbon neutral. You see the growth, the CAGR has gone from, 5% of cars sold globally to about 18% of cars sold globally. More than 60% of vehicles sold in China are EV. It's picking up in the US, more battery stations, government funding, and tax credits. So it's the, if AI is the future of tech, this is the future of auto.
I find it really interesting, Jess, because, right, I feel like we get to a point where everybody's like, okay, the growth names, stay away from them.
Right.
Stay like this. But she's Sylvia reminding us that
right.
This is the future.
And we always have this type of argument with tech and growth, and yet they still continue to power things out.
They come back. Sylvia, really smart. Thank you. And really thoughtful. Sylvia Jablonski, CEO and CIO at Defiance ETFs, on the phone in New York City. Don't go anywhere. Just about 11 minutes left in the trading day and the trading week. Jess Metton, Carol Messer. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. A dip now into the red, a reversal from our last update. The Dow, the S&P, and NASDAQ all trading lower. The Federal Trade Commission is expected to sue Amazon for antitrust violations next week. This, according to sources, marking the agency's fourth swipe at the online retail giant this year. Microsoft's $69 billion acquisition of Activision Blizzard does look set to clear its final regulatory hurdle. And with more on the story, here's Bloomberg's Denise Pellegrini.
Well, Charlie, the UK competition authorities have signaled they will accept the latest concessions. And this ends a wait of more than a year and a half to complete the biggest ever gaming deal. The Competition and Markets Authority says Microsoft's proposal opens the door to the deal being cleared, and the move represents a stunning turnaround for a deal that was once thought over after running up against concerns from antitrust regulators, including an initial veto from the UK back in the spring. Charlie.
And that's Denise Pellegrini. We got Microsoft down now by 1%. Tech selling off ahead of the close here. Activision Blizzard is advancing on this story, however. Activision up now by 1.7%. Yep, you can buy them now. Apple's latest iPhones and watches are now on sale. A test of whether a new smartphone design and modest smartwatch changes can help return the company to growth. Apple shares today, they are advancing up by 0.5%. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Palatin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. I'm just looking at my gainers for our TV colleagues and our simulcast, and I realize one is now in the red. So that's going to be a
so
fun
much for that
conversation.
one.
Yeah, I'm going to get creamed for that one. All right. Having said that, we've got some little lighter fare as we get ready to wrap up the trading week. Tinder rolling out an ultra premium subscription tier to its dating app users, charging almost $500 per month, $499 to be exact, to access features like exclusive search and matching.
$6,000 per year plan there, Carol Masser.
Oh my God.
And invite only, and includes a, quote, VIP search, which, what exactly does that mean?
I don't know. It's not. Apparently, it's not currently provided with its existing paid plans. Tinder not providing further details. Tinder Select, it's called, only offered to less than 1% of Tinder users who are among the app's most active, the company said. So if you're desperate for a date, basically now you can get to pay up.
Yeah, and you're looking at, of course, Tinder parent Match Group seeing a decline in subscribers there. So this apparently might be part of the effort to try to fix things. But if you look at that stock year to date,
what's it doing?
So it's ticker symbol MTCH for our listeners. It's down about 0.4%. So really hasn't gone anywhere this year.
Yeah, the chief product officer over at Tinder saying, we know that there is a subset of highly engaged and active users who prioritize more effective and efficient ways to find connections. And so we engaged in extensive tests and feedback with the audience over the past several months to develop a completely new offering.
Yeah, if you look at the League, this is another dating app. It has a VIP plan that costs $1,000 per week. So this is pretty wild when you see some of these numbers here.
Tinder calls them the power users. It's the top 10% of users by time spent on the app. They contributed an average 53% of total time spent this year, according to research from Apptopia. So I am curious to see kind of, does it make better matches? Like, is the payoff, the impact, does it work?
It's a great question. I've known some people that, they didn't use this particular one, but they were on Match and it worked out for them. But it seems pretty pricey.
Did you swipe right or swipe left?
Right, exactly. That's the question.
Wait, left, right? Left is like...
I think it's going to be a left for me.
It's a left for me as well. Married a long time. All right, everybody. Just a few minutes left in today's trading session. Maybe we'll talk Tinder with Romaine and Scarlett. We'll see.
See what they say.
But we are going to definitely wrap up the trading day.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting it down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms. Carol Masser, last time we spoke, it looked like we were maybe getting a bit of a rally here, but then, of course, after you last appeared, the market has gone south.
I'm so sorry, market. I had no impact on this, but I think it kind of makes sense after the week that was in the Fed meeting, and I think going into a weekend, I think people are a little bit tired, and we're kind of waiting for maybe Fed speak, economic data points, kind of what comes next. That just kind of feels about right to me.
And especially this week, the S&P 500 snapping its streak of 102 sessions without a drop of at least 1.5%. So that was its longest stretch since 2018, Katie.
Yeah, and the S&P 500, third straight week of losses. You would think I'd have a more impressive size and scope, but that happened last month too. It just feels like the wheels are maybe starting to come off a little bit here. Maybe those higher interest rates finally making themselves known to some of those equity bulls.
Yeah, and we talk about some of those key moving averages that have been broken for those technical analysts out there that are really sort of looking to that trend line. Is that trend line now, Jess, to the downside?
Yeah, definitely. And especially when you're looking at that downtrend line, if you're looking at the S&P 500 in particular, on a quarterly basis, it's on pace for its first quarterly loss actually in a year. So next week will be the final week in the third quarter.
Yeah, we should point out, of course, for the S&P 500, a down week to be sure. In fact, setting up here for what looks like it's going to be the worst week that we've seen in quite some time, erasing all of the gains for the month of September, erasing all of the gains that it had in the month of August, and erasing all of the gains that it had in the month of July. So this is a market that effectively has gone nowhere since that phenomenal run through the first 6 months. And now here on this Friday afternoon, here on September 22nd, the S&P 500 posting its worst weekly decline since March 10th. A 0.2% decline on the day, about a 3% decline on the week. The Dow Jones Industrial Average down 0.3% here on the day, while the NASDAQ Composite is going to finish fractionally lower by about a 0.1%. And the Russell 2000, that was your relative laggard here on the day, down 0.3%, setting up for what looks like it's going to be the 5th straight week of declines.
Yeah, a little perspective in terms of where we are in 2023. You still got a NASDAQ 100 that's up 34%, an S&P that's up about 12%. It is really the small cap universe, so that continues to lag, Katie. It's just up, what, about, I don't know, 0.8% here on the year.
And if you take a look under the hood of some of these indexes, and you take a look in particular at the industry groups, there's a lot of red, there's not a lot of green for this Friday. You can see up at the top, you do have some of the chip makers, the semis getting a little bit of love, up by 1% or so. Then some of those tech hardware names also managing to stay green. You go down the list, though, to some of the biggest losers. Banks on the day, down by 1.4%, and autos off by 3.5%. Of course, Tesla is down by a not insignificant amount today, and that is weighing on the industry group overall.
All right, so let's get to some of the individual gainers. Ford Motor Company, right? We've been all focusing on the UAW, on the strike out there in Detroit. GM and Stellantis now facing some walkouts at maybe as much as 38 more facilities as talks with their workers union failed to make some headway. Ford apparently, like they all have different relationships with the UAW, the automakers. Ford spared the escalation after making some progress in negotiations. So Ford, it was the number 4 gainer in the S&P 500, up about 1.9%. Got to talk about Apple at its highs today, up 1.8%, still finishing the day with a gain of about 0.5%. The iPhone 15, you've also got watches going on sale today. And there was also another story late yesterday about the company giving smaller raises to its retail employees this year. So there's a lot of play, a lot of focus, but nonetheless, Apple eking out a little bit of a gain today. Don't judge me. I don't even know if you're going to bring it up, but Wayfair was up almost 5% in today's session. Bernstein coming out, raising their call on the name to market perform from underperform. Raised their price target from 65 or 265, excuse me, from 60. You had Wayfair down 2%, but as I said, it was up as much as 5%, closing the day just under $60 a share. Wah, wah, wah.
I'll take the decliners. Looking over at Scholastic. So this is the children's publishing company, ticker symbol SCHL. That's down 13%. It was its worst day since March 24th of this year. If you look at that, those shares were dropping after it did report larger than expected adjusted loss per share for the latest quarter. It also flagged some seasonality issues with the sales of its education solutions unit. Another one, of course, ARM, which was the biggest IPO of the year that went public last week. Chip Designer, it was recently listed, but of course, Susquehanna actually initiated a neutral rating on the company in this note from earlier today. If you look at that stock, though, it actually fell 1.6%. And then also Deere, wanted to point that out, the world's top agricultural equipment maker there, looking at that stock today, down about 1.8%, its worst day since September 21st, so obviously yesterday. And then looking at that, Canaccord Genuity actually downgraded shares from hold to buy.
Let's talk about what went on in the Treasury space here. If you take a a look at the Bloomberg Aggregate Treasury Index here, down on the week on a price basis here, continuing a trend that we've seen now for at least the past 3 weeks. Yields on a daily basis are lower, but on a weekly basis, they remain elevated. 5.1 and change right now is where we end on the 2-year. That's higher than where we were just 7 days ago. Similar story for the 10-year yield, which at one point did crack above 4.5%, now settling in today at right around 4.42. And on the longer end of the curve, you take your 30-year yield, we're at 4.5, and the 20-year at 4.7 here. And it raises a lot of questions here about the correlations that we're starting to see in the market, the positive correlation now between stocks and what's going on in treasuries, and what that means for market positioning, particularly now that that Fed meeting is out of the way, right? We got to wait till, end of October before we get the next one. And we don't have a whole lot. We get some economic data over the next few days. It'll give us maybe a read on inflation here, but this is a market kind of left to its own devices with a couple of potential gray swans out there, including a government shutdown that could come at the end of next week.
Yeah, that's the thing. I mean, it feels like we're entering into a little bit of a void. I mean, PCE, now that I've said that, we'll probably blow it out of the water, but we'll see what happens. It's interesting, though, to think about that positive correlation that has emerged, because even though you haven't seen it in the price action, I talked to a lot of people who say it's time to really step into bonds. It's time to lock in those really high rates and get comfortable with duration here. Maybe if we finally do see some relief on the yield front, they'll translate into good news for equities.
You know, it's interesting. Sylvia Jablonski over at Defiance ETFs was on with us, and she said she has seen a little bit of panic selling, certainly this week, but she says she's also seeing a lot of, what did she say, buying on the income side, outsized buying. And she said this isn't the time to be selling. This is actually an opportunity. Mind you, this is her business, but nonetheless, that when you start to see a little bit of a pullback, this is when valuations kind of come back to making a little bit more sense, certainly maybe on the equity side of things, and you can find some opportunities. She was all in on AI, right, Jess?
She was, and especially when you're thinking about the dynamic between what's happening with yields trading, especially the 10-year around the highest level since 2007, but then what that means for the equity market, in particular tech, but also unprofitable tech names. Those are the ones that are getting sold off even more so than when you're looking at those big tech counterparts.
I think it's interesting, too, when we talk about sort of where the outperformance was over the past few days here. I thought it was interesting, at least today, you had a sizable outperformance when it came to emerging market equities here. And the idea that people are still kind of on that hunt for a return, maybe it doesn't necessarily have to be the Magnificent Seven, maybe it doesn't necessarily have to be in the bond space. There are other pockets of quote-unquote value out there if you're willing to look for them.
I was looking at what was the top gainer in the S&P 500 this week. I think it was Humana. I'm waiting for it to kind of load here.
I thought it was.
Well, it was number 2, CBO Global Markets. But it's interesting, right? You know, there are opportunities out there, and this is where you have to fundamentally do the research, right, and look at what a company's business is all about.
And it gets, you have something to say, Katie Griffin?
No, I was hoping you'd go ahead.
Oh, I was just going to talk about horses.
No,
Are we
I
going to
think
talk
you
about
should.
something else?
Yeah, no, I actually was also going to talk about
Can we talk about Tinder Select? Well, who's going to pay up $500 a month for exclusive search and matching?
Swiping left on
So
that
this story is interesting, right? So for our viewers and listeners who don't know, Tinder is offering a service, an ultra premium service, Carol Masser, where you can pay for the very low price of $499. That's $499 per month, $6,000 a year, and you get special VIP features.
Yeah.
What are these VIP
Which they haven't said.
Right.
Yeah.
Further details to come.
$6,000
Swipe
per
up,
year.
swipe down.
Yeah, well, I
rather
think,
than
I don't know, I think Jess is the only one who would have use for this, because I think the rest of us already have, you know.
Yeah, I think we're all married.
What is that supposed to mean?
Well, I mean, the rest of us are
You're
married.
single. You can actually,
That's
you
all.
know.
I mean, but still, I mean, $6,000. Come on now, per year? No.
I don't know.
I don't know. Isn't that worth it? To find the love of your life? Or
I'm
something
reading
else?
the article. So for $6,000 a year, just to enumerate what you could possibly get, you'll be able to access VIP search. Again, not sure what that means. Matching and conversation. So I don't know. It's cool. Someone should try it out and tell us about it.
It's not going to be me.
Jess.
No, Jess.
Well, they're only rolling out to a very select group of people. It's just like 1% of their users there, like the power users, I guess.
Exclusive.
Right, who are like on it all the time. It sounds a little desperate.
I don't know. This is way outside of my frame of reference.
This is what
here.
happens when we've done a lot of
This is
talking.
definitely a Friday.
We go to Tinder and
Meanwhile,
influencers,
there's an
liver.
asteroid that's plummeting back.
Yeah, you
towards
guys
us
should
here
read about this,
With,
actually.
this is great. Did you read this story, Carol? Do you actually read?
No, yeah, I do read.
Outside Bloomberg.
I do. I
landing.
love science and I love space in particular.
Well, you're going to love this. I mean, this asteroid that apparently might unlock the keys to the creation of Earth and the universe. We actually collected a sample from it like 3 years ago and been waiting for the spacecraft to make its way back into our orbit, coming this weekend. It's going to like shoot out the sample.
It's landing in the Utah desert. On
Where all
Sunday.
the aliens are, right?
That's why
that
they're
the
chose
government
that.
doesn't keep telling us about, right?
Put it right there in Area 51 or wherever that's out there. Or is
This
that
is
Nevada?
real, though.
Apparently the
Everyone should go
wine
Google
segment
it.
has started early.
Yes.
All right, guys. Well, asteroid or rains, have a
been
safe
fun.
weekend.
Hope
Tinder
to see you on
Select.
Monday.
Hope to see you on Tinder Select. Is that what you said, Katie?
No, that's
No.
All right, have a safe weekend, guys. That'll do it for our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you on Monday. Talking about other folks in the media.
Of course.
Right? And this week we got a super big gift in the way of a big media story. You know what it is. Rupert Murdoch, his decision to step down as chairman of Fox Corp and News Corp after nearly 7 decades at the helm. In his place, he's going to leave his son, Lachlan Murdoch, with a bit of a daunting task. So let's talk about it. Thanks, Dad. Feels very Succession-like.
It is.
Let's get to it. Bloomberg News media reporter Jerry Smith with us on Zoom in New York City. Hey, Jerry, so glad to have you here with us. You've had some time to think about this story. It's a company and family, I would say, that you really know very well. How are you thinking about what faces Lachlan Murdoch?
Yeah, that's right. I mean, there's always a lot of intrigue about the Murdoch family. It's almost like covering the royal family. And I think anyone who's watched Succession is, especially fascinated with the Murdochs, given that they were partly the inspiration for the show. The news yesterday, it's the end of an era for Rupert Murdoch. It's not terribly surprising. The question of who was going to succeed him was really answered a few years ago, where Lachlan was appointed as the CEO of Fox. And that was when Rupert sold off most of his entertainment assets to Disney. So Lachlan is in charge of Fox, and that's a much smaller company than it used to be. There's also News Corp, the other wing of Rupert's empire that is, consists of the Wall Street Journal, the New York Post, and several newspapers in the UK. And these are businesses that are facing real challenges. In the TV business, it's no secret that cord cutting is accelerating. Fox has really clung to the old cable TV business model, really more than any other media company. They haven't really gone too aggressively into streaming. And the newspaper business is facing serious challenges with the decline of print, and digital advertising is really, for the most part, going to the big tech companies. So Lachlan, this really formalizes and solidifies his role taking over for his dad's empire, and he has some real challenges.
Why now? Why this moment for Rupert Murdoch?
That's the question everyone's asking. I think everyone expected that this would happen. He's 92 years old. He's had some health issues. So I think eventually there was going to be a day where he was going to pass the torch. Why it's happening this week, I think, is what everyone's wondering. He's 92 years old. He put a letter out to employees and said, look, I'm stepping away from my role, but I'm still going to be involved in the company. I'm still going to be showing up at the offices. So in a way, he's saying he's passing the torch, but he's really not going away at all.
What kind of media mogul is Lachlan?
Yeah, I mean, politically, he is very much sees the world the same way that his dad does. He's complained about other media companies not covering the legal challenges facing Hunter Biden. Rupert's letter yesterday basically suggested that Lachlan sees the world the way that he does, and they're going to keep fighting the culture wars together. So he is very much sees things the way Rupert does, which is a contrast from James, Lachlan's younger brother, who has more liberal sensibilities and has, expressed those concerns about his father's empire and what it's done.
Jerry, can I ask you one question? Fox News, how's it doing?
I mean, it's still chugging along. It just lost Tucker Carlson, which was the biggest star. But it's, we've seen a lot of Fox News stars, from Glenn Beck to Megyn Kelly to Bill O'Reilly to Tucker, who have all been pushed out. And the Fox News is still one of the most watched cable channels, ratings wise.
Makes a lot of money, I'm assuming.
Still it generates a lot of profits for Fox. So, despite the fact that they just paid this large settlement in the Dominion case, and they're facing another lawsuit with Smartmatic, another voting machine maker, Lachlan has defended Fox News, and it's hard to imagine that he's going to take Fox News in any different direction than his dad.
You mentioned publishing earlier in newspapers. What about News Corp?
That's right. I mean, News Corp, Fox and News Corp were separated. News Corp is the newspaper business. They also own book publisher, HarperCollins. It's a difficult business, obviously. The decline of newspapers is a real challenge. The threat of AI is something that the CEO of News Corp, Robert Thompson, who is one of Rupert's closest confidants, he runs News Corp. And this is a publishing company that they've tried to put the Fox and News Corp back together about a year ago, and they abandoned that effort in January of this year. Investors had a lot of concerns. They felt like the two companies combined were really devaluing what those two companies could be on their own. So that was something that Rupert tried to do and failed, and investors really pushed back. And it's hard to see exactly how that would make sense, combining those two companies again. They're very different. But yeah, that's the other side of Rupert's business. He's always been a lover of print newspapers, but that's an industry that's really facing a lot of challenges as well.
Hey, one thing I wonder, Jerry, too, is how much has Lachlan been behind some of the recent decisions, big business decisions at the company, whether it is to buy something or sell something, get out of a business?
Yeah, I mean, I think that Lachlan's would, and he often does point to Tubi as an example of how Fox is trying to think about the future. I mean, I mentioned how they're still very much focused on the cable TV business, and they don't put a lot of their high-profile shows on streaming, unlike a lot of other media companies. But Tubi is an ad-supported streaming service that Fox has acquired, and the value has increased, the viewership has increased. So I think that's probably one of the biggest deals that the Murdochs have done in recent years. So that's something that they like to point to.
I do also wonder, and just got about a minute left here, Lachlan, at some point, kind of he's on his own, but he's still got siblings. And we've seen the tensions among the family before. Again, feels like Succession, but it's real, folks, the Murdoch family. Is it possible that there will be some challenges, especially when you think about, how much of stock of the companies are held, by family members or by, the family overall?
Yeah, I think a lot of close Murdoch observers are saying that the news this week was not a huge change, but where things could really change is when Rupert eventually does pass away, and the voting shares in a family trust would go to the siblings, and the siblings would have to decide the future of the company, whether Lachlan stays in his role, whether the Murdochs even stay in the media industry. So that's going to be a moment that I think people think a lot could change.
Yeah, and even with the changes, it's still a fascinating media empire to watch, no doubt about it. Bloomberg News media reporter Jerry Smith, thank you. Have a great weekend on Zoom in New York City. Carol Massar, Jess Matten, Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets for you all day long here at Bloomberg. Another losing week for the S&P 500 index, down now by 3 in a row today. The S&P fell another 2.9%. In fact, stocks did close close to session lows for the S&P 500 index. That was an almost 10-point drop today, lower by 0.2%. S&P wraps up the week, heads into the weekend at 4320. The Dow today back below 34,000, down 106 points today, a drop there of 0.3%. The Dow right now at 33,963. NASDAQ, the composite index, down 12 points to 13,211, a drop there of just about 0.1%. 10-year yield 4.43% with a 2-year that's yielding 5.10% on the 2-year. Spot gold today up 0.3%, $19.25 the ounce, and West Texas Intermediate crude up 0.8%, $90.34 a barrel. Treasuries rebounded, stocks struggled at the end of a jittery week that saw investors positioning for a higher for longer Federal Reserve stance. Briefly, as we've been reporting, GM and Stellantis face walkouts at 38 more facilities as talks with their workers' union failed to make headway, while Ford was spared the escalation after making progress in the negotiations. Again, recapping, S&P down 9, drop there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get the Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. All right, you are listening and watching Bloomberg Business Week. I'm Carol Masser, along with Jess Menton here in our Bloomberg Interactive Broker Studio on YouTube and, of course, on Bloomberg Originals. Jess, you and your team think about coverage, going into the weekend. There's stories that come out. How are you thinking about the week that was?
So we're actually having a story that I'm putting together with a couple of my colleagues on Sunday, taking a look back at what's happened, especially because we were talking earlier with Michael McKinsey about not just the Federal Reserve, but these other central banks with the Bank of Japan as well as the Bank of England, and what this means, especially when you're looking at what's happening in the bond market in relation to what that means for the stock market, and then just globally, because there is this question and concern still.
It's like the magic huge whiteboard, right?
It is. And then everyone, again, because of this week, I mean, each day it's different, right, Carol? You think of, hey, soft landing, the consumer's strong, the economy is doing well, and then something like this happens, and then those recession concerns start to creep back in.
Is it safe to say we have had a significant reset this week?
So it's hard to say that because you still don't have the S&P 500 technically in a correction.
No, you don't.
So
right?
really, I would argue, my sources would say and say that this wasn't that big enough a correction. And the big thing is watching where the make or break levels would be in the bond market, because that's when you're going to see more of a recalibration across stocks, other asset classes.
What about was it yesterday or the day before, like we're talking about, I think it was the S&P, I think it was the Russell, and I think it was the NASDAQ 100, and correct me if I'm wrong, but taking out like 100-day moving averages on the downside.
Yes, so that was on Thursday.
Is that significant?
It is, because it's more of obviously not the 200-day moving average, but it's still a longer-term moving average. But technicians would tell you, too, that tends to be more backward-looking when you are looking at the moving averages. But I would say something that's significant. If you look at the industrial sector in the S&P 500, obviously that houses transport stocks. When we think of Dow theory and what that means for the economy, that actually was at a record 2 months ago, but is now drawn down more than 7% since that, so closer to a correction. A lot of that, though, underneath the hood, airline stocks. Those are the ones that have been changing their current quarter outlook because of fuel cost, rising energy costs.
To the downside.
Exactly, and those are the stocks that have gotten pressured recently. And so that's something that my sources are keeping an eye on. And then, of course, something you like to talk about too, Carol, we brought up small caps earlier. Those are the ones that typically bottom before large caps. So when you look at those particular corners of the area.
So are they bottoming, or are they showing a trend line that says there's more losses to come and that could be problematic?
So it would be problematic on the small cap side. For industrials, they're just a little bit off the peak there. They're not in a correction or in a bear market. Say if that were to happen, that'd be something that's a smoke signal. That isn't happening yet. We actually saw that happen with industrials back in, it was probably March or April of last year.
What about transports? I always love looking at kind of
yes, so
transportation.
Dow theory,
yeah.
right? So not just airlines, but then when you look at the other components with that, when you think about rails and different companies like that, those have been holding up a little bit better, and then that tells you that the economy is strong. And then also copper prices. When you look at what copper says about the global economy, Mike McGlone over at Bloomberg Intelligence, he loves to talk about the copper to gold ratio. I always pick his brain about that. It's been moving a little bit lower, but typically you'd have to see it a lot lower in order to really think, hey, this is sending an alarm bell about the
Well, and
economy.
how much of it is like China and like
That's the other big thing too, because you have the world's second largest economy, and also it's so closely tied to the metals market as well and what that means. So you have a lot of conflicting signals, which is making it really tricky for money managers, especially because we have one more week left in the current quarter.
Right.
For the third quarter, this also is the worst time seasonality for the year. We all know that. We've talked about it so much,
September
right?
is
yes,
terrible.
exactly. And especially
for
the
equities.
last 2 weeks
Yeah.
of September, because that's where people are squaring away if they got behind on certain trades.
You know, don't like roll your eyes at me, but I'm already starting to think about the next earnings season.
Oh,
you know,
what?
Well, we were doing the simulcast.
Yes.
I was pulling up JP Morgan, and I'm like,
October
okay,
13th.
October 13th in the morning, and I'm just like, okay, it's just a few weeks. It's 3-4 weeks ago, three weeks. You know, but I just think earnings season is going to be very important in this kind of environment where we're not quite sure soft landing doesn't
Yes.
happen, or do we see better growth? So the Fed's got to be more aggressive, or are things maybe a little bit worse than we realize?
I'm glad you brought that up, because Gina Martin Adams, who we all know
Yeah.
and love at Bloomberg Intelligence, she had a note this week that was talking about she feels like the market is shifting more so away from the Fed just because we know the Fed is getting closer toward the end of its cycle and more geared toward earnings that are going to be moving markets. And
Makes
that
sense.
was her argument, and especially because we know that if you're looking on a quarterly basis, we've seen a contraction for at least 3 quarters now, but to her, the worst is past. And specifically, when you take out energy, this last quarter, actually, earnings growth was mildly positive. So for
Interesting.
her, she feels like the earnings session, and when you're looking at on aggregate on analysts on Wall Street for the fourth quarter, that's when earnings growth is supposed to be positive once again.
I feel like this
Carol.
time around, rather than searching for AI on every earnings release, we'll be searching for like recession or like growth.
So there are optimistic signals, but it's those days where things are down where all of a sudden everybody gets jittery again, right?
Hence the tricky market. Hey, listen, speaking of tricky markets, the crypto market, and we've got a great voice on this. Thomas Profumo is Kraken's head of strategy. Of course, Kraken, a global digital asset exchange. He's joining us once again on Zoom in New York City. This is our weekly check on crypto. It's so funny, Thomas, how we go from talking about crypto on a daily basis to maybe not talking about it so much and being replaced by other issues. Nonetheless, tell us about the activity on New York Exchange and what's been going on.
Sure. I mean, I think the whole year crypto's been killing it, and I think right now the last several months, as you mentioned, we're kind of in this lull and holding pattern. But on the data, Bitcoin up 44%, Ether up 27% year over year, the S&P and 15% respectively over that same period. It's really this last several months that we're kind of in this wake me up when something interesting happens, and I think investors have been in holding pattern waiting for something interesting to take place.
But is it a trade or is it fundamentally make sense? I mean, you're talking about Bitcoin up. Yeah, it's up a lot, but it's nowhere near the 68,000 it traded back in November of 2021. We're looking at, what, 26 and change here on Bitcoin. So is it just a trade and just coming off of some lows, or is it something fundamentally that's going on in your view?
I think this is the case with all asset classes in general, including equities, for example. I mean, this year you've had the pressure of interest rates. People expected interest rates to be between 425, 475 by the end of this year. We're already at 525, 550 with another hike on the way. So I think the fact that we have positive performance when you have these massive shifts between outcomes and expectations is pretty good in general. As far as what might kick off the next bull run, I think 2024 is where the story is at with the Bitcoin halving. So who knows? Hopefully history rhymes and repeats.
So what is the activity on your exchange, though? How much demand are you seeing? How much activity on a daily basis? And what are people
So in terms
buying?
of volume,
yeah.
In terms of volumes, we see anywhere between $500 million to $1 billion of turnover a day. That's quite typical. And interestingly, whenever you go through these kinds of bull and bear cycles, we tend to reset at higher levels. So back when I joined Kraken 6 years ago, a good day was 50 to 100 million. So of course we're now 10x that. So I think we right now, given that the crypto winter is really at these levels, is actually quite nice because we see frankly an next bull market we think could bring us into the high billions every single day effectively.
Hey, before you go, got about a minute left. Our Hannah Miller has a great story out on the Bloomberg and just says, it's entitled in our Tech Daily newsletter, "The Best Crypto Parties Are Happening Overseas." Basically what she's saying, you know, and she went to, I think, Bitcoin Miami. Like, it's just changed so much if you go to a conference, right? The heyday and the euphoria seems to certainly have gone away, at least for now. But she says, too simple to say that the crypto party is over. Basically what's happening, it's just moved. We're seeing it overseas. What are you watching overseas in terms of developments that tell you about maybe where we go from here? And just got about 40 seconds left.
Yeah, I've heard the same comment yesterday from someone who was in Singapore recently for a conference. I think this is really a symptom of the regulatory scene in the US. It's nice to see that Congress is recognizing that legislation is going to bring clarity. I think every other country has already done this. And so that's setting a lot of the foundation for businesses looking in those regions to set up shop. I'm hopeful that the US is going to come to a conclusion here. I don't know the timing of this. But again, we've been fighting for last place, unfortunately.
All right. Well, listen, good to get even just a few minutes with you. So appreciate it. Thomas Perfumo, he's Kraken's head of strategy on Zoom in New York City. And if you go to Hannah Miller's story too, she's, you know, just talks about how things have changed. We should go overseas to some of these Asia's Top Crypto Conference, Jess, and it's called Token 2049. Had DJs, a conference floor arcade, yacht parties, a selfie booth. So kind of like the heyday of like what you would see in the Miami conference, but it's not happening here. All right. A lot happened, though, when it comes to world and national news. Let's head off to D.C. and Nancy Lyons for an update. Hey, Nance.
Thanks, Carol. President Biden is creating a new federal office of gun violence protection.
It will drive and coordinate a government and a nationwide effort to reduce gun violence in America, and it will be overseen by an incredible vice president who understands this more than any vice president has.
Biden says Vice President Harris, as a former prosecutor, attorney general, and senator, is the best person to lead the effort. New Jersey Senator Robert Menendez and his wife have been charged with taking bribes from 3 businessmen who have also been indicted.
U.S. Attorney Damian Williams said FBI agents searched the senator's home and safe deposit box.
They discovered approximately $500,000 of cash stuffed into envelopes and closets. Some of the cash was stuffed in the senator's jacket pockets. That's not all. Agents also discovered a lot of gold.
In return, the senator was said to have tried to block criminal investigation of 2 of the businessmen and helped the government of Egypt, with which the third one had connections. In Washington, Irv Chapman, Bloomberg Radio.
Menendez calls the charges baseless, but he is temporarily stepping down as chair of the Senate Foreign Relations Committee. A week into the auto workers' strike, United Auto Workers strike, workers at all 38 General Motors and Stellantis parts distribution centers are joining the picket lines.
We will shut down parts distribution until those 2 companies come to their senses and come to the table with a serious offer.
UAW President Shawn Fain and this worker at a Stellantis distribution center in Bolingbrook, Illinois, believe drivers will notice.
There's a lot of them out there on the road, and there's going to come a time when they're going to need a part. And I and the rest of my brothers and sisters want to be in there to serve them.
Ford has been spared in the escalation. The UAW says the company has agreed to some concessions on pay. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks closed very close to session lows today. A losing week as well. Now on the week, the S&P 500 index was down 2.9%. That is the third weekly loss in a row for the S&P 500 index today. Finishing the week, heading into the weekend at 4320, dropping today by 10 points, lower by 0.2%. Dow Industrials down 106, a decline there of 0.3%. NASDAQ lower by 12, a drop there of just about 0.1%. 10-year yield 4.43% with a 2-year 5.10%. Gold up $5 the ounce to $19.25, up by about 0.3%. West Texas Intermediate crude up 0.8%, back above $90 a barrel on WTI. 90.30 today. Brent, the global benchmark, 93.58, up by 0.3%. Some of the other stories that we are following for you: Goldman Sachs and Citadel Securities each have reached multi-million-dollar settlements with the SEC over how they labeled millions of trades. Again, recapping, stocks lower, 10-point drop today for the S&P, down by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate the update. You are listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Jess Metton. Tim Stanovic is off on this Friday. And, you know, Jess, it's been a little crazy in and around New York. I was trying to do something this morning, and it was like a whole block.
It's
like
just
you couldn't get into buildings.
You can't get in. There's barricades everywhere.
Right. It's been
tough.
It's been the UN General Assembly. Yep. It ain't over yet, but we've also had going on New York Climate Week against the backdrop of UNGA. So we've talked to a lot of voices involved in cutting carbon and improving our climate. Our next guest working to help others do exactly just that. So back with us is Louisa Lewis. She's founder and CEO of New Climate Culture. It's a biodiversity think tank. They're basically focused on delivering climate solutions to communities and industries around the world while influencing international policy goals. So really coming at the intersection of all of this. She is on Montreal, or she's in Montreal, I should say, where we find her on Zoom. Louisa, good to have you here with Jess and myself. Great to see you again. Hottest year on record, Mother Nature clearly showing us how things have changed, and we are definitely seeing the impact of it all. From your vantage point, though, how is the world doing when it comes to climate solutions, the adoption of those climate solutions, and then really having an impact in making our climate better?
Thank you so much for having me on and asking me this question. I can see progress is what I can say. And when I see progress, it's great because that's exactly what we have to do. We have to point to those examples of what's working. For example, I'm seeing cities all over the world, including in Montreal, that do things like, for example, in the summer, they shut down portions of their streets so that there's pedestrian walkways, installing gardens and planting more trees all over the city. The importance of that really just can't be underestimated, because creating more pathways for pedestrians to move creatively outside of automobiles, outside of fossil fuel dependent automobiles specifically, is amazing and provides just more creativity, more movement in the city. I also see the influence of having gardens and planting more trees. That type of activity, especially female trees, having a good balance of male and female trees, is really what's going to help.
Wait. What does that mean? I think there's people like, what do you mean? Right. I didn't even know. What do you mean by that?
Yes. So one of the big problems that has happened across different parts of the world, but definitely in the United States with landscape design and municipal planning, is that, like a lot of people don't know enough about the biology of what they're planting. So maybe like their client asks them for, I want this kind of tree. I want this cypress tree from Greece. And they're not really choosing like the right tree for the right climate, and they're also not choosing female trees or a balance of male and female trees. So male trees are producing pollen and female trees are producing fruit and nuts. And the reason why that distinction is really important is because if we have a city full of male trees, which anyone can walk around and observe throughout the year how the trees behave, if they're all male, then we're going to have all this pollen problems, allergy problems. We're going to have to go buy allergy medicine to take care of just the overcrowded airways that's a product of this type of environmental choice that we're making with our cities. And if we have more female trees, then we have not only free food for the birds, the insects, squirrels, any wildlife that is coming through the city or around the city, seagulls, whatever, depending on where you are in the world. But also for mushrooms are going to eat that fruit and nuts that have fallen to the ground. But so that's going to build topsoil. That's going to feed the environment, the ecosystem, maintaining biodiversity, maintaining all the community of the ecosystem that we need.
But can I jump in for a minute? Because it's got to be more than just planting green plants, right? Forgive me, but I mean, there's a lot of companies out there that are making things, doing things. I'm curious about, what are the companies that you might be working with, or where you're seeing some significant changes there. We talked, with a guest yesterday about the agricultural environment and what's going on in California in terms of rules and policies. So making kind of the supply chain, if you basically do anything in California, you're going to have to step up and meet certain rules and regulations, and that's going to make for greener farming, which we know really can have a negative impact on the climate if not done in the right way.
Yeah, so that's something I've been talking about all year on my interviews. If anyone looks that up online, especially with regards to the hemp and cannabis industry, we've been teaching how to do the most sustainable practices in farming policy across the whole U.S. because my flagship farm that I work with and that I'm partnered with is in Connecticut, and it's a USDA certified organic hemp farm. And hemp is really important because not only is it good for materials and industrial materials, and it's highly renewable, it grows faster, it's more sustainable, it sequesters carbon really quickly. It's better than using a tree or another type of plant in 9 out of 10 cases. But it's also really good at taking heavy metals and toxins out of the soil, which makes a toxic waste site that's had pollutants in it. It can clean that up in a couple seasons so that you could actually farm food in that soil after a disaster. But yeah, we are seeing changes, and I think that another exciting focus that people need to hear about in terms of investment and supply chain is the idea of there's two really critical supply chains that need the world's focus, and one of them is being the marine conservancy through kelp reforestation, through working with invertebrates and kelp specifically. So there are farmers out there, like ones that I'm partnered with my company, who are showing and demonstrating that we can have these kelp forests grow. And this is what's cool. So not only are you going to create agricultural feed with kelp, it's also human food. It's also food for the entire marine ecosystem. And further to boot, yes, it's sequestering carbon, so it's cooling down our atmosphere while it's growing.
Right.
But not only that, it's going to help mitigate hurricanes, which means these kelp forests are slowing down and helping reduce the impact of tidal hurricanes.
Right. No. I totally get all of this. So I guess and we've only got about a minute left here, is, Eloisa, what is it that companies that you are seeing or working with that are doing things, whether it's in fashion, whether it's in architecture, doing stuff that really helps move the needle? I don't disagree, and I think most of those folks who are listening or watching right now don't disagree with all the good stuff you're talking about, but who's actually moving the needle when it comes to reducing the carbon footprint? And just got about 30 seconds left.
I think that I'm moving the needle, and my partners are in this business are moving the needle. So that would be, New Climate Culture. That would be the Climate Foundation. That would be Sound Ocean Science, who's regrowing coral reefs, farming coral reefs, and anyone who's affiliated with us. CBG Gurus is another company. There's just a lot, and I'm taking on hotel clients right now specifically. So that's going to be the focus of the next quarter for me, is a couple hotel clients in 2 coastal regions in the U.S. And so what I can say is that the people who move the needle are the people who have the most ability to range over all of the complexity, because there's a lot of moving parts. And if you're not able to come in and manage all the different intersections of where there's transportation, there's waste production.
Eloisa, we have to run. Because if I don't go, the computer is going to go. Be well. Take care. Eloisa Lewis, she is of New Climate Culture.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We begin with a developing story and a headline off of the Bloomberg Professional Service. Rite Aid planning to shut down hundreds of stores. This, according to the Wall Street Journal, that headline right now on the Bloomberg. Rite Aid planning to shut down hundreds of stores. Microsoft's $69 billion acquisition of Activision Blizzard does look set to clear its final regulatory hurdle after the UK competition authorities signaled they will accept the latest concessions, ending a wait of more than a year and a half to complete the biggest ever gaming deal. On a down day for the rest of the market today, Apple shares advanced. Apple's latest iPhones and watches are now on sale. And with that story, here's Bloomberg's Steve Rappaport.
Charlie, it's a test of whether a new smartphone design and modest smartwatch changes can help return the company to growth. The devices went on sale in about 40 countries in its first wave, including in Australia, Hong Kong, mainland China, the US, UK, and France. The iPhone 15 Pro and Pro Max models will represent Apple's biggest sellers throughout the rest of the year, and the ability to both create and fulfill demand for the products will make or break its holiday period. Charlie?
And that's Steve Rappaport reporting today. Apple shares did gain by just about 0.5%. The FTC, according to sources, is expected to sue Amazon for antitrust violations next week, marking the agency's fourth swipe at the online retail giant this year. And again, repeating the earlier headline, Rite Aid planning to shut down hundreds of stores. This, according to the Wall Street Journal. Those are some of our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Jess Mitten and Carol Masser here in the Bloomberg Interactive Broker Studio. We'll have more coming up, but first, let's get a check on the latest world and national news from Nancy Lyons in Washington, D.C.
Thanks so much, Jess. New Jersey Senator Bob Menendez and his wife Nadine are facing bribery charges. U.S. Attorney Damian Williams with the Southern District of New York alleges the two took bribes from New Jersey business executives in exchange for influence.
The indictment alleges that through that relationship, the senator and his wife accepted hundreds of thousands of dollars of bribes in exchange for Senator Menendez using his power and influence to protect and to enrich those businessmen and to benefit the government of Egypt.
Williams says their investigation is not yet over. Menendez says he is being falsely accused, but he has temporarily stepped down as chair of the Senate Foreign Relations Committee. The Supreme Court could face new questions about its ethics. ProPublica is reporting Justice Clarence Thomas has appeared at several recent events sponsored by the billionaire-backed Koch network in hopes that he'd be a fundraising draw. Bloomberg Government's Zach Cohen with details.
There's an appearance here of Justice Thomas being used as a fundraising draw for a conservative group that typically advocates before the high court.
Bloomberg Government's Zach Cohen reporting from Washington. The Koch network says Justice Thomas was not present for fundraising conversations at the events he attended. Israeli Prime Minister Benjamin Netanyahu says Israel is at the cusp of a historic breakthrough with Saudi Arabia. He told the UN General Assembly today he expects a peace agreement soon between the two nations.
Such a peace will go a long way to ending the Arab-Israeli conflict. It will encourage other Arab states to normalize their relations with Israel.
Netanyahu says such an agreement will truly create a new Middle East. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Carol.
Thank you so much, Nancy Lyons there in D.C. I just want to point out that the second most read story on the Bloomberg all day today is the story we talked about with Katie and Romaine about the raw meat influencer's $11,000 steroid habit sparking lawsuits. But it is the second most read story, right after the Senator Menendez story.
I mean, even just the visuals of everything in that story when I was looking up during that segment on TV, it was pretty wild.
Steroids had a role?
I think just a little bit there. I mean, it tracks now. It all makes sense.
It totally tracks. Also among the most read stories has to do with Goldman Sachs and Citadel Securities, each reaching multi-million-dollar settlements with the SEC on today over how they labeled millions of trades. So Goldman just agreed to pay $6 million in a fine for sending inaccurate or incomplete trading data to the SEC on at least 163 million transactions over the course of a decade.
It's mind-boggling when you do see those stats there. And then meanwhile, the SEC said that a coding error at Citadel Securities led to short sales being labeled as longs and vice versa, and that Ken Griffin's market-making firm would